The RSI is your assistant. It is a tool that assists you. You have to make the decision to tell it what to do. There are times when the indicator will be perfectly right, and there are times when the indicator will be blatantly wrong. The money you will make from here to here is going to be the best money you're going to make in your life. It is not a crystal ball to predict the future. It is just evaluating the past. We want to be covering RSI today. And RSI, we're going to cover in 3 chapters. Chapter number 1 is going to be what is RSI? How is it being used in the market? Then 2, how do you set it up? And then 3, how do you actually use it? We're going to break down the myths and all that stuff that go around this indicator as well. So shall we begin? Now, I'm going to open up the whiteboard. All right, the words RSI stands for Relative Strength Index. Now, when you think relative, I'm not talking about uncle, auntie, whatever words you call it. It's not that relative. It's relative to current time to the past. It is not a crystal ball to predict the future. It is just evaluating the past. So we're going to show it to you how Urban Forex looks at RSI and what does it mean. So let's set it up first. I'm going to go into indicators. And as soon as you click on indicators, you can start typing RSI. Now, if you don't find it, you look for the word Relative Strength Index. You click on it, something on the bottom like this will show up. Now, to change the settings, if I click on the settings here, settings, these are the inputs. These are the type of questions they ask you. RSI settings. What's the RSI length? You might be asking me, what number should I put? Doesn't matter. I want to teach you what this number means, so that way you can put whatever number you want. So let's talk about this for a second. So let's say if I choose the RSI length 5, I chose a random number. I clicked OK. What this adjustment is doing, it's whatever time frame that is selected from the current candle, it's going to look back 5 candles and it's going to measure that and give you the relative strength of that. Now, if I chose 5 and in the last 5, nothing has happened. And if we look down into the RSI is just chilling, right? So at the current moment, RSI is not saying anything. But if I change the RSI settings and I make it 50 and I say, look at the last 50 candles, it's going to include all of this. And now suddenly your RSI has lost its mind. It's like, whoa, it's like flying up like a rocket, right? So what you set, it will measure that. So the RSI is your assistant. It is a tool that assists you. You have to make the decision to tell it what to do. Now, how do we make use of this information in this market, particularly with the RSI? Okay, here we go. Certain things happen into the market where I need you guys to understand how the market movement works. So let's take a step back and bring that understanding a little bit more crisp into your mind, which means you want to buy shoes, then there must be someone willing to sell the shoes. It's that simple. You want to buy, he goes, finds you a seller. You guys say, okay, transaction done. Broker says, my little commission, please. You give the broker his commission and the market is happy, which means if you want to buy your shoes, it's not the indicator. It's not the charts. It's none of that stuff. What matters is if you want to buy your shoes and you go to the mall, you don't ask them, what's the trend of the shoes for the last 90 days? According to the newspapers, these shoes should be worth a lot more or a lot less. Wait, what are you doing? You want to buy shoes? You like the shoes? They have the shoes? Handshake, transaction done. That is trading. Now, that transaction is done on price. This piece here. So the single most important piece that you need to understand is this right column. Many people mistake this by saying, since it's so small, I need to focus on the biggest thing, which is my chart, because you have to understand what are they trying to say. So you just found out that Nike shoes, one of the factories is going to close down in China. You heard that after the Chinese factory closes down, the factory in Japan is closing down. The factory in Vietnam is closing down. You're assuming they're going to be low in quantity. So you want to buy 10,000 pieces. You go to the mall and the mall says, you got to stand in line, buddy. I only got 500. You want 10,000 shoes. They got 500. The broker is trying its best to find you more of these shoes. They can't find it. So what are you going to do? They're like, you have to stand in line because all these people want these shoes. You're going to say, F those people. What's the price right now? 5755 is the price. You know what? I'll give you this price. Give it to me. No, I can't do that, sir. I'll give you this price. Give it to me. I'll give you this price. Give it to me. There's a bigger hotshot that comes and says, I will give you much higher price than what this guy is offering. Give it to me. The speed at which it goes up tells you how desperate people are to buy this.
Now, are you curious about the exact strategy Navin has been using to approach the markets? The Mastering Price Action course reveals all of that. In that course, you're going to understand the logic behind each price action movement. And from that, you will be able to take your trading to the next level by having a much more solid understanding of the markets. And because you're a subscriber, just click on the link in the description below to access our exclusive discount. Time to take your trading to the next level. All right, let's get back to the video.
Myth number one, I'm going to break for you guys on RSI. Ready? In RSI, let's just put this at the standard settings of 14. Here we go. 14. RSI is telling you things are overbought. They're above this dotted line. Above that dotted line, people claim it as overbought. Now, judging by the speed, how this thing went up here, is there demand in this product? Whatever this product is there demand for it? So if you go looking at this and saying, ooh, overbought, I need to sell this thing, you're going against logic. The indicator is telling you sell, but the market is telling you they want to buy more. They can't get their hands on enough of this. Any little dip that comes, they buy it. They're desperate. That means they were willing to pay this price on average. This is the price they were willing to pay. Then someone came into the market. They shot up the speed and they're willing to pay this price. And you're sitting there like, Mamma mia, holy moly. They're buying this aggressively. That means they want to buy more. If any discount comes in, they're going to buy more. That's what it means. But if you look down in your RSI, it says overbought. The standard terminology taught in the market about RSI being overbought is you should sell it. So I need you guys to understand there are times when the indicator will be perfectly right. And there are times when the indicator will be blatantly wrong because it's an indicator. It can only tell you the past. You don't trade on the past. You're trading on what it can do, right? If there's one thing you want to take away from this webinar, let's take a look at a different area where it's a little bit oversold. This area is oversold here, right? It's below that dotted line on the bottom. It's a little bit oversold. So the markets have been going down, right? And now it's coming to oversold. Take a step back and instead of looking at just this on its own, and you look at the context, tell me the speed that the store was giving discounts for this Nike shoes. Has the speed went faster? It went faster here, right? That's the moment where it's like this, it was going up, then it was going down, then it was going up, then it was going down. What you're looking for is not higher high, higher low, lower low, lower high. None of that structure BS stuff that's been taught around. What you're looking for is what happened when it was trading at this price. 2 hours later, bro, it's still at that price. 3 hours later, bro, it's still at that price. I don't need to look at a chart to say people are happy with this price. That's interesting. What happened to that price? People are still trading at that price. Good. I don't need to look at a chart. What happened to that price? That price dropped. How much? That price dropped 10%. How quickly? Within 10 minutes. Whoa. Now I look at the charts because I can feel the rhythm of the price that's moving. I don't need to look at the chart to validate the logical information that's coming out of the market. Now, I'm trying to simplify this as much as I can so that way it goes in. If I tell you the RSI settings, you need to set it at 30. That's the golden number. What are you going to say to me? That's the number you need to do. And that's how you become rich. Take a step back again. And I'm going to show you here. Remember that oversold part, this part right here. What did they tell you just here? Let's talk about the phase one. Here's phase one before it became oversold. Tell me the speed. How was the speed? Was it fast or was it slow? Okay. Now the speed, notice what my eye is looking for. I'm going to train you right now. What my eye is looking for is I see this is the lowest point, new lowest point, but I'm also interested in how long did that take? Why is it taking so long? That means people were happy with that price. They accepted it. That's okay. Then it goes new low. That's a lot faster this time. Why was it so quick? Why are they dumping this thing now? It goes in my head of like, it took 10 days for it to go down and now it took 2 days to go down. That sounds like desperation to me. That's called relative. It's using that relative information to try to tell you what they're observing. The indicator is doing that. Now, when you see where this arrow is, what's it telling you now about the speed after it goes new low? The time seems to be similar, the amount of time, but what's it telling you about the speed? It's super fast. So if the speed is fast, that means the store who has to sell the merchandise is dumping it. They're getting rid of it. Now, if they're getting rid of it, there's no need to buy. Let's see how much they get rid of it. New low. How much new low? It was fast, but compare it to relatively to before. Is it much faster than that? Speed is the same, isn't it? How big is it? They dumped it 2% compared to 15% last time. That's interesting. Now, these are the early warning signs of oversold. Now it makes sense a little bit. Now the RSI is actually going to be helpful. And this is the time when people say, I bought when it was oversold, I made money because now the RSI matches with the logic. But there are times, like I just showed you, it will not match with the logic and the RSI will be wrong. And the guy or girl will be scratching their head saying, sometimes I make a lot of money with RSI and sometimes it just eats all my money. There's something wrong with this indicator. Maybe I put the wrong number. Absolutely not. So the RSI can be a good tool to tell you, hey, buddy, it's oversold. Analyze it. On the current market, hey, buddy, it looks overbought. When I look at the market, oh my goodness, I'm not selling that thing. Okay. Now, some of you guys asked about what about divergence? Hand in hand with the logic that I just showed you, the divergence will start showing up. And then the divergence folks will start saying, you see, divergence is the golden key. Is it? At the end of the day, what market are you trading and how does that market move? You just got to understand that. It's not that difficult. We're making it difficult because we're swimming in a sea of information of nonsense. You know what I mean? So this is the example I always like to give, and it makes people understand very quickly. Okay, let's open up some of the yens. I'm going to show you gold. All right, here we are in gold. Don't worry about the word gold. Just do this. What you need to be concerned about is how do I understand intent based on what I see? You can use the RSI as well. Now, let's use your example and see this. The RSI, everyone, is now oversold. Shall we buy it? Absolutely not. Why? Why should we not buy it? It's fast. They're dumping it. Why do you want to buy if they're dumping it? It's illogical. So now let's take a look at this. I'm going to take you guys up to a monthly chart, okay? So for a period of time, prices are accepted at $1,800, okay? So gold was on average accepted at $1,800, up and down a couple $100 from this moment to this moment. Now, I know that's years, but just take it as the word moment. Now, prices before that, if you take the context in mind, it went stop. Happy, 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 happy. Happy at 800. Satisfied. 1800, we buy jewelry. Everybody's happy because people who are selling said, okay. People buying said, okay, no problem. And then prices gave a discount, 1900 all the way down to 1600. Was it fast or was it slow? A lot of you guys are saying slow and the word choppy. The answer is correct. Why did you use that word? Relative. You looked on the side and based on everything else, you're like, that's pretty slow. Now tell me that same logic when the market goes from 1600 back to 1900, tell me the speed. Is it fast or is it slow? It's fast because now you are comparing it to the slowness that you just saw. That recovered fast, but they're in the vicinity, right? They're in the area of I'm happy around 1800 price. Then what happened to the discount? From 1900, how much discount was given? 1800? How long did that take to give that discount? 1, 2, 3, 4, 5 candles, right? 5 candles to give a discount. In this particular case, 5 months. It took that long to give that discount. From 1800 and it recovered back to 1900. Tell me how fast did it recover? 2 candles. It ate the whole thing up like it didn't matter. That's demand. I move my head back from the screen so my eyeballs don't burst, and I see, interesting. Happy, 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 happy. Discount. Whoop. Interesting. Discount again. Whoop. This is where the word higher low comes from. They're willing to pay more. Higher low is not a textbook thing that you have to study. Higher low means they just now said they're willing to pay the higher price. That's what higher low means. Okay. Now that has gone up to back to 1900. Tell me the discounts now. Fast or slow? It's not even coming down at all. It's slowing down and people are becoming happy at this price of 2000 and no more discounts are coming in. What happens next? It pops. Now that it pops, does that mean the demand is high in the market right now, or is there no demand? The demand is high. Now, wait a minute. It's in the news today, right? 1, 2, 3, 4, 5, 6 candles prior, which means six months ago, you know this information before anybody else does. And the world is screaming today, oh, all-time highs, all-time highs. And now the world is jumping onto gold now. High demand. You already knew the information ahead of time. Now, wait. Take your eyeballs down. It's overbought. Should you sell it? Are you effing kidding me? Never sell that thing. It just took so much time to blast and you want to sell it because an indicator told you it's overbought. The indicator is just telling you what it sees. That's all. It's not telling you to sell. And that's the biggest myth that comes around the RSI. It's the lack of understanding because sometimes it's actually right. It's actually right because the price action is right. It matches. But in this context, it doesn't match. So the more you look at it like this, the more these tools, they're not bad. They can help you. They can tell you, hey, buddy, things are overbought. Go have a look. So when you come to look, you're like, oh, I'm not selling that. I don't care if it's overbought. I'm not selling that. But thanks for pointing it out. You move in deeper and deeper from there. And that's how you build your career. Now, oversold can help you. In this context, in an uptrend, oversold is like, this is fast. And then this is very fast. It's oversold, but I cannot buy it right now because it's so fast. Hold on, Charlie. Hold on. Wow, recovery is slow. Bam. Oh, I don't like that. I don't like that. Recovery is slow. Slow. Boom. Interesting. Now, during this process, it takes you time to figure it out, right? When you figure it out and you do a buy, the money you will make from here to here is going to be the best money you're going to make in your life than someone who tries to guess and says, look, I picked the bottom. You bring that guy to me, I will slap him and her all day long. That is for Instagram and YouTube. I picked the bottom. Imagine how much money that means for you. You don't listen to that voice. You listen to the voice that says, I know they're going to buy. I'm going to load up so much. I'm going to make so much money that this guy who looks pretty on Instagram is going to cry just by seeing how much money you made. I know it's a rough example, but the whole point of this whole thing is it's got to go in. You got to understand, use it in your charts, understand it, practice it on demo, and then you'll start to realize, hey, once you go brown, the math adds up. Thank you, everyone, for coming to this webinar. It was great fun. I hope you guys learned something today. As always, I don't like wasting anyone's time because I don't like my time wasted. So I hope every time that you come to these webinars, you learn something. So thank you so much for attending. Until next time, bye for now.